All right, next we're going to move on to a snapshot of the 3 plan designs that Support Services offering effective December 1st of 2015. You're going to see here in the first column you have your HMO traditional plan, $30 copayment, $2,000 deductible. The second column is your HMO HSA plan, which is a $3,000 deductible, then covered at 80% after the deductible has been met. And then the third column here is the PPO Key Care plan, and that is a $30 copayment as well with a $5,000 deductible. So you'll note some changes here. As you go down this snapshot here, you're going to see the deductible amounts at the top for both the individual and the family. Then you're going to see your out-of-pocket maximums for all of these plans as well. What your out-of-pocket maximum is essentially what it says. It's the maximum amount that you are going to pay out of your pocket for these plans. So anything you pay towards your deductible, any co-payments that you pay for your medical visits or your prescription, all go towards meeting this out-of-pocket maximum. And again, keep in mind it's combined now. You don't have a separate one for medical and for prescription. So you'll see those across the board here. You'll notice that on the traditional HMO plan and the traditional PPO plan, there is a co-insurance after you reach your deductible of 30%. So once you reach your deductible on those 2 plans respectively, then your portion is going to be 30% co-insurance. Now on the HSA plan, there's a 20% co-insurance, so less money out of your pocket. So once you reach the deductible on that plan, which is $3,000 on that plan, then your services are covered at 80% by the insurance carrier, and then your responsibility is a 20% co-insurance. Moving down further, you're going to see the prescription coverage here. Again, keep in mind we were just talking about the mandated changes going to a 4-tier level. You're going to see the Tier 1 at $10, Tier 2 at $30. Your Tier 3 is now $50 copay, and the Tier 4 is a 20% co-insurance. So you're going to see that change reflected here in these summaries. All right. Now moving on to this next slide, you're going to see the premiums per pay period for the health insurance for each of the 3 plans. Now I know you all will have this information at hand too. One of the things I want to point out is the bottom portion here, the annual premium savings by going on to the HSA plan. And we're going to spend some time here shortly talking about the benefits of enrolling into the HSA high deductible health plan. However, you can just see here a quick overview of the savings that you'll get just on the premiums alone for these 2 plans. So in the first column, looking at the employee only, from the HMO traditional plan to the HMO HSA plan, saves you just over $500 just in annual premium alone, not to mention some of the other expenses that we'll talk about. But just in premiums alone, you'll save over $500. If you're currently on the PPO plan and elect to enroll in the HMO HSA plan, you can save up to $1,300 alone in your premiums. So that just kind of gives you an overview, and now we can spend some time talking more in depth so you understand about the health savings accounts. Now, before we dive into the details of the HSA account, I want to talk about preventative versus routine or diagnostic care visits. So your preventative care services, as defined by the health care reform, are covered at 100% on your plan. So these services include going to the doctor for your annual physical, getting blood work for cholesterol, screenings such as colonoscopies and mammograms. All of those are covered at 100% underneath your plan. It's very important that all of us go and have those checked. They're covered at 100% on your plan. Now, when does that become diagnostic? So in the event that you go into your doctor's office and you're in there for your annual exam and you say, oh, by the way, I've had a problem with my knee. Them checking out the knee condition because you've asked for that specifically, it could then become processed as a diagnostic claim. So you want to ensure that when you're going in for your annual physical, your routine screenings, that you tell them that's your preventative care visit. Now, if you are in a procedure and something is discovered in the procedure and they take care of it at that time, then of course that procedure may in turn become diagnostic versus preventative as well. So it's important to note that. All right, so let's go into what's an HSA on this next slide. So basically, an HSA is paired with the qualified high deductible health plan, which you all have. It's that middle plan that we talked about, the HSA Luminous plan that has a $3,000 deductible, covered at 80% after the deductible. So your portion is that 20% coinsurance. So with that plan, you also would open up a health savings account. And this is done through First American Bank. Essentially, it could be referred to as your personal savings account. And that savings account is used to pay for qualified health expenses. You don't lose the money. If you were to leave support services, this money goes with you up until you retire, after you retire, as long as the funds in that account are used to pay for qualified health expenses. Now, in addition to you contributing towards this account, which we would always recommend, we were showing you the annual savings from going the traditional HMO to the HSA account. So the idea here is to take some of those funds that you're saving and fund that HSA account to help prepare you to pay for the expenses that you may incur leading up to the deductible, that $3,000 deductible on your plan. However, Support Services is also willing to match you dollar for dollar up to $40 a month as a contribution into your HSA account. Again, that's your money, free money into your account. If you use the money this year, great. If you don't, it rolls over and stays with you for the life of the account. And again, it goes with you. Support Services won't refund that money if you don't use it. It is essentially your money to use. So that's why I say it's free money. You won't pay taxes on any withdrawals, and the money can earn interest, very similar to a 401k account. Your contributions are tax-free, and it reduces your overall taxable income, because anything that you want to contribute towards this account can also be taken as a pre-taxed payroll deduction. So you get some savings there as well. Okay. So, I talked about the HSAs available through First American Bank, and this just gives you a quick overview on First American Bank and some of the benefits that you have by using this facility. This financial institution. So there are no monthly account fees. There's no minimum deposit required. By opening up an HSA account, you'll also receive a free debit card, or credit card, you can refer to it as. That card can be used to pay for eligible expenses on the account, or you can just simply withdraw the money as well. You get free e-statements. Now, if you wish to have paper statements, or if you wish to invest your funds, there may be some fees that apply there. But everything electronic on here is free of charge to you. If you want some more information about First American Bank, please contact Human Resources, and the link for First American Bank is also up here as well. You can visit their site directly. And then on to how the HSA plan works. So essentially, you have the amount that you contribute, you have the amount that Support Services will give you. You must open up an HSA account in order for Support Services to match you that dollar for dollar to receive that potential $40 per month maximum amount. There's also some IRS maximum limits on the account. So for 2015, you'll see the individual is $33.50, the maximum amount that can be contributed to your HSA. That includes your contributions as well as your employer's. The family maximum for 2015 is $66.50. Now for 2016, the individual is staying the same at $33.50, and the family maximum is bumped up to $67.50. So you have an additional $100 there. Now moving on to the next slide with the qualified expenses. So I mentioned that the savings account is there to help you offset the cost of those deductible expenses. So we know we can use it for deductibles. We know we can use it for co-payments. You can also use it for a variety of other qualified expenses. Prescription sunglasses, diabetic supplies, orthopedic shoes, smoking cessation programs, chiropractic care, hearing aids, hearing aid batteries. So there's a variety here of eligible expenses. And again, whether you're with Support Services or down the road, if you're not with Support Services, these are all eligible expenses that you can use, you can pay for using your HSA funds. And then lastly on the HSA, this next slide, I just want to tell you how it works. So typically you go into your doctor's office and you show them your Anthem ID card, and then they collect a co-payment if you're on one of the traditional plans. So if you're on the HSA plan, you're still going to go into the doctor's office, still provide them your Anthem ID card, but the concept here is you're not going to have a co-payment. You're responsible for the charge in itself, meeting up to your deductible. but you don't have to pay it at that visit. So you go in, they see what plan you're on, they will then process your claim. So once they process your claim, submit it to Anthem. Anthem's going to apply any Anthem in-network discounts that they have, provided that you're seeing an in-network provider. At that point, they will generate an explanation of benefits, also referred to as an EOB. That EOB will get mailed to you. So when you get that explanation of benefits, you're going to see your charge, the Anthem discount applied, and then your portion due. That might be going towards your deductible. So essentially, that EOB that you get should match the invoice that you receive from the provider's office stating what you're owed, because they also receive that same information. Okay? Then, once you know your balance of what you are responsible for, let's go back to that account with First American Bank. You can use that debit card they provide you to pay for it, or you can just simply withdraw it, make a withdrawal to yourself, and then pay via cash or check, whichever is your preferred method of payment. So it's pretty easy to use.